Fears of the coronavirus mean the stock market could be headed for its worst week since the 2008 financial crisis. The Dow Jones Industrials, NASDAQ, and S&P 500 all fell more than 4% yesterday. It was the Dow's worst one-day point drop in history. In the past week, the Dow lost an entire year's worth of gains, closing below where it was at this time last year. CBS News business analyst Jill Schlesinger joins us. Jill, good morning.
Good morning.
Is this a temporary reaction to this? Could it rebound quickly if this calms down, or is this a long-term thing?
Well, we don't know yet. It's certainly temporary as we know it right now. Here's what's really happened. It's fascinating, actually. If you just pull back to a week and a half ago, these stock market indexes were making all-time new highs. The consensus was this virus is awful, but it seems to be contained. The number of cases reported in China was starting to diminish, and people really felt like the economic impact would be limited. As soon as we got a spread in Italy, in Iran, in South Korea, new cases here, that's when investors started to get really freaked out this week, and they sold because they're not sure of the extent of it, how long it will last, and what the true economic impact will be.
I bet you're going to tell us not to panic. I bet your mom had something to say to you, Jill, she always does, because I said, Jill's going to come on today and tell us not to panic. What's Jill saying? What did your mom say?
My mother said, don't tell people not to panic.
Exactly. It's hard not to panic when you look at those numbers.
Well, okay, I agree with you. I think these numbers are scary because we are now in a correction, meaning we're down more than 10% from the recent highs. This is the fastest correction for the S&P 500 ever from top to the correction point. So here's why it's scary. It happens fast. You get a little bit of like, wow, I feel like I've whiplash. But when you think about it, most of us are long-term investors.
Right.
We are thinking about decades in the future. You probably have a diversified portfolio, meaning your stock position probably looks pretty rotten this week, but your bonds look great, and hopefully you've got a little cash in that account. When you feel the panic, you try to say to yourself, hey, wait a second, I don't need this money for a while. I'm on track. I don't want to alter my plans. I'm not going to fall into this trap.
So don't make changes, radically right now.
Absolutely
I'd like
not.
to know, when do you panic, Jill?
Okay. I've had my panic moments. You know when I tell you what, if you needed your money this year, if you said, I had money in the stock market and I needed to buy a car, I have to pay a tuition check, and by mistake I had that money at risk, then I think you have to sell now, free up that cash, and make sure it's secure. But if you are if you don't need this money this year, keep your plan in place. I know it's hard to do. Again, you can feel the butterflies, don't act on them.
Of course, if you've got some extra money laying around, you can buy some stocks.
Oh, look at the market timer right here.
There you go.
Yeah, well, put that money to work. That would be very good advice for sure.
Good advice.
Thank you, Jill.
Jill, thank you very much.